Hi, I'm Presley Nash, and along with Carrie, Nick, and Sid, we are here to talk about how you should classify your business. We decided that the best way for y'all to classify your business is to incorporate it as an LLC with the S Corp option. It gives you the most benefit with the least amount of consequences. Um, what you asked us was that Tony and Victor, you both want limited liability because of Tony's new marriage and Victor not being involved in the corporation. So with a LLC versus the just regular corporation, you get the limited liability. But the benefit is that it's passed, the income is passed through, so you're not taxed twice like you would with a regular corporation. Also, you receive the benefits of the S Corp under Section 1 or 1361. And this also, if you ever decide that you want to become a C Corp, it'll be super easy to do that and it will take very little effort.
My name is Carrie. I'm going to be discussing the benefits and cons that Tony will face if they do choose to take the LLC entity with the S Corp election. First, Tony has expressed his desire to continue managing the business, and under the LLC with the S Corp election, he is able to continue his participation in the business and still have the limited liability protected that the LLC offers. He also mentioned that he'd like to have some benefit to his intangible asset that he feels he has as the local popular personality. And with that, him and Victor can decide how much to assign that personality as his intangible asset to go along with the other business assets. However, with Tony, he's going to have a couple of consequences tax-wise that Victor won't face. First off, he will be liable for self-employment tax because he's going to be actively participating in the management of the business for more than 500 hours in the course of the year. Another personal liability that Tony's going to have at this time is the $100,000 mortgage is in his name, and also the $50,000 personal loan is in his name. Unless they refinance those two loans under the LLC, Tony will be personally liable for those two loans until they.
My name is Nick, and Victor is going to have 3 benefits from the LLC with S Corp election. The first benefit is he'll be able to receive a controlling interest in the LLC while maintaining his liability under the protection the LLC offers. His second benefit will be that he will not have to pay any self-employment taxes. Since he has no interest in actually managing the company, he most likely will not reach the 500-hour limit to pay those self-employment taxes on. And the last benefit is that the income that he receives will be treated as passive income. And we were not able to find any tax consequences for Victor.
My name is Sid, and to close us up, I'm going to talk about the tax consequences to Sports Clothes itself. First of all, neither Victor, Tony, or Sports Clothes will be taxed on the formation because the formation qualifies as a Section 351 transaction. It qualifies because there are 3 requirements. First, there has to be a transfer of property. The property has to be exchanged only for stock, and the people that are transferring property have to own at least 80% of the company after the transfer. And since Tony and Victor meet these requirements, they won't be taxed on the formation. Also, Sports Clothes will receive a carryover basis on the assets contributed by Tony and Victor, meaning that Sports Clothes won't be taxed on any gains until they sell the assets. As we've shown you, an LLC with an S Corp election is the best option for Victor and Tony in the formation of Sports Clothes. We thank you for asking us to answer your questions, and we welcome any more questions that you might have.